What's up, people? What's up, people? What's up? Hello.
Hello.
Yeah, what's up, people? As soon as the weather starts getting nice again, I think I'm just going to dress up as the original Joker from the Batman series, Cesar Romero. Just walk around like that, see if we can get people to have a good time out in the streets. So, let's talk turkey. You know, why do I even use cliches like that? I'm so gay. God, I hate myself most of the time. So anyway, I just basically came out of an alcohol-induced coma. Let's not even get into that. I got to sleep. I just woke up. I sat down. I saw the market was actually red. Okay, now let's talk about what has happened. We saw the market on the precipice of disaster. There was true fear out there that America's system was broke. There's a lot of people that still think it's broken and that the money that's been pouring into the stock market is artificial. It's done by the government just to pump everybody up to make them feel good. So many negatives. We also have learned the saying called the wall of worry. You can't go up every day without being worried about it. My opinion, it seems like there's too many people that have missed the boat in this market, which is kind of why I think it can't stop going up, even though it really should. Okay? Are we really going to go right back to 14,000 as if nothing happened without actually having one moment of reality, one moment of clarity where the market starts to scare people again? We've had maybe one or two down days, which have been met with, I've been telling you about, one down days met with 5 or 6 up days. Whoa. And that's the way the market's been trading. And you've been doing fine as long as you've been buying these dips. But right now, we are releasing earnings tonight from the master, Google and IBM. Now, the way I'm looking at it is the insane way. Are we going to stand here and think that Google is not going to partake in the absurdity? Granted, the stock has gone up a tremendous amount of point-wise. But percentage-wise, with my theory that every stock has to be up at least 200% off its all-time lows, or the lows from May, we're not exactly there yet. So let's be conservative about Google. Whatever they say, you and I aren't going to be able to interpret these numbers and figure whether or not it's going to go higher or lower in the aftermarket. It's just a question of whether they want to bring it somewhere. The news, how many times have you read a release of a news and you read the release? It's very difficult for me to talk now. I think I just actually have to stop doing these bad things. I need more rage. That's another thing I liked about when the market was crashing. It was exciting. We didn't know what was going to happen. We might have been cast into despair and rioting in the streets and going out there hunting for your food. I was ready. Weapons, bullets, fishing rods, diesel fuel. I had a generator and all the bait frozen you could possibly use, as long as my generator kept my freezer going. That's, of course. These are all just things. I had the war paint. We were ready to go. It was rocking. We were going to take the storm! Take the storm by charge! And just lead our way. Just run through the streets, causing havoc. I love chaos. But now we got this controlled chaos thing. This illusion of sanity. This illusion that everything is all right. Part of me, of course, wants to believe. I'm a family man. I have a house and a mortgage, and I'm one of those typical Americans that would rather see the market go up than down. The sane person in me has made 2009 a waste of time. Because with every down move, I believed at least it would be a 10% down move. And we never got those moves. We never got any follow through on the downside. And each and every time, I wound up losing money. And not only did I lose money shorting stocks, I also missed out on the opportunity of buying those stocks. It all started out so nice in March and April when I was telling you guys if they think GE's going out of business, now's the time to be buying stocks. Little did I think we would continue to rally for the entire year, but that's where we're at. Now, back to Google. Do you think Google's not going to partake in this absurdity? Can't you see a 10% move in Google at the close, whatever they say? Can't you see it? So we're talking about a 53-point move in Google, 10%, right? So let's be conservative. Let's look at a 30-point move on the upside, right? So what I want you to do, I'm going out on a limb here because I'm giving a specific strategy. I want you to buy the 550 calls. Check it out, y'all. Hear me out. Risk reward is already set up for you, so have no fear. You're going to be buying the 550 calls for 420, and you're going to be selling the 560 calls for 210. Basically risking 220 if the stock hypothetically goes to zero. Now, why am I limiting my profit potential? Because we're being a conservative kind of person. We will willing to risk this 2 points on the assumption that Google will probably go to around 560. If you want, you could be a little bit more risk, not adverse, but tolerant and sell the 570s. So then you're risking 3 points, which thinking about it now, actually makes sense. Because if we do get that 10% move, a 53-point move in Google after the close today, I'm going to be sick to my stomach having to get rid of my 550 calls at 560. So basically you're risking 2 points with that strategy to make around 8. That's if it goes to 560. And then if you want to risk 3 points to try to make 18 points, does seem a little bit better. Okay, so that's that. Now we're just talking about, let's talk about the stocks that we've been trading. Akamai has been ridiculously strong. I've been telling you guys to buy that stock because whenever it gapped down on earnings, all it's done is fight its way back. The stock has been in a range for about 10 years now. I know what it does. I've seen it a million times. Now, when the market hammered the stock on earnings reports, and then that was the last that it went down. It went down the day of earnings and then started making its comeback the following day at around 16 and change, 17. Then lo and behold, there was some news that there were insiders buying a lot of stock. Well. Always something good to see that the insiders are confident enough in their company to buy on the dip. Very good. Then rumors started circulating around that Akamai might be a buying opportunity, which makes those insider buys even more genius, even though it's sort of illegal if they started buying more stock because they knew their company was getting taken over. But this is the stock market. We're not the most legal-minded people. We're looking for those kind of things. That's what you want as X continues to run. Another stock. One moment X is going out of business. One moment there's demand that's going out of control. One report comes out that the government is doing this. One report comes out that there's no reason to be buying U.S. Steel. The company's a sham. Love it. Anyway, you always do what the market's telling you to do. And today, the stock went positive. I mean, it broke back, tried to sell off, had a nice reversal intraday. You got to be buying that stock. So let's talk about Google. So if you're looking to play long, and if you're looking to play short, look at those options again. So let's assume you want to go short, okay, the Google, and you're thinking about a 10% slicing of the stock. You're talking about 480, 490. So you want to buy the 510 puts and then sell the 490s. So you're basically risking 3 points to make 18 points on the downside. Interesting play. This will all be for naught if we get no move in the stock, which I can't see happening. But if you've read the book, The Best Laid Plans and Why They Go Wrong, or something along those lines, the more you think something through, it just doesn't work out like that. Of course, the Hig worked out the way I wanted it to do because I got out, but I digress. All right, I'll see you guys later. I'll make another video. Good luck to you, and we'll see what's going to happen.